Welcome everyone to another episode of Financial 15. Kevin and I are ready to go. Lots of great information today. We're going back to retirement spending, a very popular topic. Will you spend all your savings in retirement? Will you live longer than your savings? Will there be something left for the next generation? We're going to tackle that topic today. You definitely want to stick around.
Yeah, probably one of the biggest questions we ever get is, will I have enough money to survive on when I retire? We do need to tackle that question. Everybody wants to know the answers to it, so I think we're going to touch base on that today. Again, if you want to find this video or any of the other ones we've done, please go to our YouTube channel and subscribe. Lots of great content, lots of stuff that's important to you, we know that. Or like us on Facebook, and most importantly, visit our website at beckerorr.com, and you'll find there's tons of stuff there that may be helpful for you. But today we are talking about, will I spend all my savings in retirement? Everybody wants to know this question, Clint. They're worried about not being there, or maybe I don't have enough. How do we address this, and what are the studies that we want to look at tell us?
Exactly. Now, everyone's going to have an individual situation. We're looking at a study here today to help give us some guide of what happens in general in retirement, what the trends are when it comes to spending in retirement. This particular study, Employee Benefit Research Institute, they did a study in 2018 about how American retirees spend their accumulated savings 2 decades into retirement. They're not talking next week here, Kevin, next month. They're looking 20 years after you retire. So I think the first point there is, even if you retire, you probably have a long time horizon. Often retirement is measured in decades, not weeks and months. So you do have a long time frame, and that's what they're trying to solve. In that long time frame, how did people spend their savings? So let's get to some of the findings here to help us answer the key question for today. Why don't you start us off here, Kevin? What were the findings of this study?
Yeah, basically, when we take a look at the findings, we found that it's not exactly what everybody thought. And as you mentioned, remember, this is a long-term solution. People seem to think they retire and that's it. I don't have to worry anymore. No, you've got 20 to 30 years, especially today. But what we found, especially in the first 18 years of retirement, was that individuals with 200,000 of assets, excluding the fixed, which is their home, spent down 25%. So theoretically speaking, in 18 years, that 200 turned into 150. So they're barely spending anything, comparatively speaking. And as we see, as you go on further with this scenario with 200 to 500, they're spending about 27%, but 500 plus, less than 12% of their money after the first 20 years of retirement has been used. So you've still got tons of money there. That's the biggest factor. 20 years in, long-term time frame, we are not spending as much as possibly everybody thinks of.
I know. And it's surprising results here. I should mention these are median numbers, meaning they're picking the middle value of the study. So likely there are extremes, people that spent everything and people on the other end that spent, zero. But middle value here, median numbers, not seeing a lot of spending. And it's across asset levels. You might think, oh, if you got millions of dollars, you don't need to spend it all. But even the smaller figures across the board, under 200,000, over 500,000, everything in between, you're seeing less spending than what might have been considered. And again, they're looking at non-house assets. So just the savings. In Canada, you can think of maybe your RSP, your TFSA. That would be the equivalent here of this American study, and essentially not spending as much as originally thought. Continuing that, additional findings here. If someone had a pension in this particular study, they spent even less. They barely touched the money. If they had a pension, you're looking at about 4%. Compared to a group of folks that did not have a pension, they were spending about 34%. Both those numbers are still small, barely touching the level of assets, but even less if you had a pension. Some last findings here. The median household in the study only spent essentially the gains of their portfolio, again, over 20 years. So not saying next month, next week, but if you've looked over 20 years of investing that money, they pretty much just took the gains in that 20-year period out, and the principal is more or less intact. And roughly 1/3 of the retirees in this study actually had more money 20 years later. So they started retirement 20 years later, they actually had more. So they didn't even spend down the gains. They spent less than the gains. And again, 20-year time frame. You're not next week, next month. I'm sure there's ups and downs throughout that period, but at the end of the 20-year period, they actually had more, 1/3 of the retirees in this particular study. I think the first thing that jumps out here, Kevin, is this is probably counterintuitive to what most people are told when it comes to retirement spending.
Yeah, I mean, basically what you're told is that you save and save and save all the way till you get to retirement. And then when you're in retirement, these are the funds that you're going to use to do exactly what you want to in retirement and how that's going to work. So basically, it's not what's going on. People are saving now, and they're still saving going forward beyond that over the 2 decades. Now, whether they're spending less whether they're not doing as much as they want to, or even if they're living their lifestyle, they're not seeming to get to that point. So, I mean, there's a variety of different rationale for why this would be done, behavior-wise, education-wise, and everything else. But you're right, the findings don't seem to mix, because theoretically speaking, you save to this certain point, and then all of a sudden, well, if I have that $1 million saved, 30 years later, maybe it's all gone. And that's where it's going to be. I saved it all up and I should spend it all. But what we're finding, as we say, 20 years down the road, there's barely been a drop of it taken away at all.
Yeah.
And
again,
what are some of the reasons?
Yeah, long time frame here. So again, if you look maybe at 5 years, maybe there's more spent, but the investments did well 10 years later, whatever the case is. But they're looking over the 2 decades, not spending as much as folks probably thought. The study, and this is still looking at the findings in the study, they had a conclusion. They made a couple of suggestions. The study was suggesting maybe a reason for this is a behavioral bias. People get into a routine. We get used to a lifestyle. We're saving money, spending less than we make. We do that diligently for decades. Hard to change that when you retire. You're probably sticking with the habits that we know. Another potential reason, again, suggested here by the study, is education. Maybe we're in retirement. We don't really know what a sustainable level of income is, so we're a little more conservative. We cut a few corners, spend a little less, just to be sure that we don't run out. And then you do that for 2 decades, well, you end up with a lot more than you probably thought when you first started out with that spending pattern. So that's what the study suggests. We'll go through a couple of our thoughts here, a few tips for people. And I think the first one here, Kevin, is that behavioral bias. It is real and it is very difficult to overcome.
Yeah, it certainly is. I mean, you've been basically doing this for 30 to 40 years worth of work. You've known what you've earned. There's always a paycheck, it seems, coming in, and you save a little bit and then you spend the rest of it accordingly. And that is the way your lifestyle's been lived. And the reason for that is so that when you get to retirement, you're going to have that. But I think that there's that behavioral bias where people take a look at what they've got. And if they start to see that account coming down and coming down and coming down, there's that panic and fear because you no longer have the job to refill it anymore. So your behavioral bias is, you know what, I'm going to still live the same lifestyle. I don't want to really spend a whole bunch more. So this way I can maintain my lifestyle when I'm 70, when I'm 80, when I'm 90. And again, it's hard to break through and say, oh, well, you know what? I did all this savings. I can now afford the first class plane ticket to travel. You may still fly economy just because there's other things you want to do and you want to save from there. So yeah, that bias is really hard to overcome, to try and tell somebody that you do have that sort of scenario.
Yeah, and part of it's not necessarily bad, right? If you're enjoying your lifestyle and you're happy, well, all right, keep doing it. You don't have to change just because the financial plan says you can.
Exactly.
The key there is just really the data is telling us that behavioral bias is probably a bigger factor than people realize. You get into habits, you get into a certain lifestyle, and it's hard to change that. Even if financially you can afford to, difficult to change it. I think your key point there was the paycheck, right? We get used to the fact that, you know what, every 2 weeks, every month, whatever your pay period is, there's money coming in the door. I don't have to worry. And suddenly that goes away. And mentally, it's hard to adjust, right? So it's hard to fathom, you know what, I'm going to keep with my regular routine. You get used to a certain lifestyle. It makes a difference. It makes a difference. So that behavioral bias is very real, difficult to overcome. A second factor here, and one of our views, maybe it's intentional. Maybe people are wanting to leave money so they can have an estate. Maybe that's for a legacy, for a charity. Maybe they want money to go to the next generation. So they're intentionally not spending it all so they can have a big pot of money when they pass away. And that pot of money can be part of the estate to accomplish their estate goals. That's not a bad thing. If that's the case, then mission accomplished, right? They're not spending it all.
Exactly.
The study's showing that a lot of retirees 20 years later still have a big pot of money. So that could be the whole purpose. And if that is the case, then fantastic. The data is showing us that likely they're going to be achieving that goal because there's money left 20 years after the start of retirement. And that's not necessarily a bad thing, right? That's probably on par with what they're planning to do.
And even when people sit there and say that, you know what, I'd love to, spend all that money, have that last check bounce and everything else, I think they're more or less thinking about some of that estate nowadays. If you have a younger generation, you have kids that you want to look at. I mean, a lot of times nowadays, look at the housing prices. I can't afford it. Well, if I have this much money, I can leave this kind of a down payment for my kids so that they can buy a house or something along those lines. And again, the other reason that estate may come into play is, as we've mentioned in the study that you saw before, if you've got a pension, you're spending sort of 4%. That's about it. And rationale is because theoretically, you still have that paycheck coming in. So that money that you have excess, you don't really need to spend it if your lifestyle doesn't change. So that is going to leave an estate. And you may be planning that going down the road. So that's another positive. And these all lead to one other point that we really need to stress, isn't it?
Yeah, I mean, a couple of them here. Part of it is, do I have enough? And that's really the driving factor, at least in my opinion. When people go into retirement, they start those spending habits. And this might be, if you want to think of a negative takeaway from the study, this might be it. Maybe people aren't spending as much because they don't know whether or not they have enough. So they're not sure, they're a little worried, a little anxious, so they spend less. They get more conservative, they change their lifestyle because they're not sure if they're going to have enough 10, 20 years from now. And then you fast forward 20 years and turns out they did have enough. So they've got an extra pot of money there, but they unnecessarily change their lifestyle in retirement. To me, that could be a negative of this whole study. Now, of course, we don't know. We don't get to meet all these people, have a chat with them, but we're just taking the data and then giving you our view. And I think this, unfortunately, could be one of the negatives, interpretations of the study. In the solution here, Kevin, not only to that question, do I have enough, but to help some of the others, the behavioral bias and the estate, the solution, we say this lots, but it's have a plan.
Yep, it's have a plan. And that's a basic scenario. I mean, the plan will eliminate a lot of this, because your question before on do I have enough? I mean, basically the problem is we don't have an end time frame. There is no expiry date that's stamped on you that says, okay, well, I'm going to this point. Now I know I can spend to there. You could be to 80, it could be to 90. I mean, if you're living well into 100, that do I have enough is a big one. But I mean, if you have a plan, theoretically, you've got that mapped out. If we've got you listed to age 96, here, we can prove that this will work till the age of 96 and go from there. Having a plan will give you a little bit more on that do I have enough scenario and what you can and cannot spend. So I think that's an important point that you really need to get to. So if anybody has more questions on this or wants to know if they need to spend more or less, please get in touch with us with chatwithclintonandkevin.com. We're more than happy to answer questions on this topic or any other ones that come along, but we hope we've given you some sort of an insight as to where your spendings are. And I mean, especially in a time frame like this, remember, we are in a long-term time frame. So if the market starts to move over a couple months one way or the other, that short-term scenario shouldn't affect what the 20 years down the road is going to come based on what your goals are.
Yeah, exactly. And that's the whole idea of having that financial plan, to provide that perspective. Appreciate everyone tuning in for the video. We'll be back again soon with another one. So everyone take care, stay safe. We'll see you soon.